Welcome back to episode 125 of the Block Runner Podcast. I'm your host, William, always here with your co-host, I-Man.
What's going on, man?
All right, we got a new special guest here with us. He is one of three co-founders of Beanstalk. His name is Publius. Welcome, Publius.
Well, I'm 1/3 of Publius, but yes.
Correct.
Pleasure to be here.
Yeah, I appreciate it.
Yeah, Publius. I guess you were kind of making it synonymous to like the term anonymous. But it's like a term for an organization, right? Or does Publius have like an actual definitive definition? Like it's a three-pronged crew, like, or is that just like a name you guys came up with for yourselves as founders or of the project?
So originally, when we deployed Beanstalk, we were totally anonymous.
Yep.
And so nobody knew whether there was one of us, whether there was 10 of us.
Yeah.
Beanstalk was simply deployed by Publius. Now, after the exploit in April, everyone thought that Publius exploited Beanstalk.
Right.
We were really committed to the anonymity. So, or the pseudonym. We were anonymous, but we were going under the pseudonym of Publius. And so we ultimately, in order to keep working on Beanstalk, we decided to dox ourselves. And so now people know that there are three of us, but we still go by Publius, and or at least when we're dealing with Beanstalk. And in particular, the reason why we do that is the goal is at some point to have Beanstalk not be reliant or dependent on in any way Publius. And we feel like if we start to participate in the capacity that we currently do as individuals, that will make retiring Publius or killing Publius, if you want to be less ceremonious about it, less peaceful about it. Whenever that's going to happen, it's going to be a lot harder to do that if we've been interacting with Beanstalk and the community as our individual selves. So we've continued, despite being doxxed and people now know who we are, we continue to act as Publius with the transparent intention to one day retire Publius whenever Beanstalk is at a place where it really doesn't need any additional guidance, in our opinion.
Sure. No, what's interesting was we did a video on stablecoins, and we were talking specifically about Tornado Cash, and we've been watching some of your podcasts that you've done in the past before with other podcasters, and we got to say, we looked at your white paper and we're really impressed, right? The structure of how you guys designed your decentralized stablecoin was very interesting and very different than probably anything that we've ever seen, right?
Yeah, I guess can we briefly go over that just for anybody who doesn't understand? Because everybody knows about stablecoins now because I guess the great Terra Luna thing was a big public exposure, I guess, to what it is these stablecoins are. And there's different, I guess, different models that are being leveraged. And I think yours is the first attempt, is it not, of a credit-based system, a little bit more algorithmically backed, not so much collaterally, collateral isn't the main mechanism as far as like ensuring the stability, right? So can you go into a little bit more detail just for people who don't understand, like what it is that makes these cryptocurrency stable and pegged to the value of a dollar? How does that work?
So Beanstalk can take the credit of being the first credit-backed stablecoin attempt, but it is potentially the first credit-backed stablecoin that has worked for any non-zero period of time, if that makes sense, or any not insignificant period of time. So at this point, Beanstalk was deployed a little over a year ago. It was obviously off for like 4 months, but Beanstalk has at this point been on for over 9 months collectively, maybe almost 10 months. I don't know exactly at this point. Whereas previous attempts at credit-based stablecoin protocols lasted days or weeks prior attempts. So in the white paper, which we appreciate your kind words, the the only stablecoin protocol that is referenced is empty set dollar, and it's cited in the previous work section. And empty set dollar was an attempt at a credit-based stablecoin, but there were a number of problems with ESD. That's the ticker for empty set dollar. There were a number of problems with ESD's model, both on what in Beanstalk is the silo and the field. So both on the depositor side and the DAO, and on the lender side, the credit side. So there were a number of problems that Beanstalk has made significant improvements on, but it wasn't the first credit attempt, so we can't take any credit on that front. But Beanstalk certainly at this point is the longest running credit-based stablecoin implementation.
Yeah, and that's saying a lot. I mean, I remember in our previous video, Iman, we were talking about how in Tornado Cash, USDC and Tether were being sanctioned, or not sanctioned, but censored. And so we were talking, if you remember, how it's like if USDC, if we can't really trust USDC to be an actual cryptocurrency where it's completely decentralized, like where do we go to, right? Is it DAI's backed by USDC? And it's like we're kind of confused as to like where do we exit in a way where we're not exposed to like the censorship. And so we ended up being like, do we go back to fiat? And so we published that video, and someone in your community commented on one of our Twitter about the video itself. It was like, hey, you guys need to meet the guys from Beanstalk. And so that's how we got connected. I don't know if you got that story from our connection there, but that's how
that makes a lot of sense, because I was going to ask what the main motivation, I guess, to making as much of a decentralized product as possible. Obviously that's the ethos of Web3 overall, but I guess in the stablecoin sector, like what are the potential ramifications if we can't figure out like a way where DeFi can create these stable products, like independent of what you're talking about, like some sort of centralized action or actors within the ecosystem, right? Because as we've seen, that can definitely backfire. It has a lot of downside risks, and we might now be able to build like a decentralized financial system without this. So is that your main motivation behind this, or what are your thoughts, I guess, expanding on that?
So the short answer is yes. If you're a business building on top of, or that wants to build on top of a decentralized financial stack where there's no points of censorship or potential censorship or centralization in your entire financial stack, not just your tech stack, but your monetary stack that you're interacting with and trading with other businesses. If you have any point in that stack where there's censorship potential or centralization that leads to the potential for censorship, it's kind of a least common denominator problem. And the result, right now, the situation in DeFi is that you have lots of different derivatives and primitives, money markets, CDPs, DEXs. You have a lot of core tools that businesses would need: the ability to borrow and lend, the ability to buy and sell, fungible and non-fungible goods. There's a lot that you can already do from a financial perspective, in theory, but in practice, nobody's doing it. And the question is why? Well, why isn't anyone using any of this tech for real? And when we say anyone, there's obviously speculation and activity on chain, but there are no businesses actually saying we're building on a decentralized tech stack and a financial stack because it makes sense for us to financially, right? And in a capitalist system, the competitive advantages between businesses are really what makes the difference. And so the question is, well, why is it that businesses building on decentralized primitives can't compete with businesses on centralized ones? Our thesis was, at the time we started working on Beanstalk, and remains, that the high carrying costs on stable coins makes it impossible for businesses building on decentralized primitives to compete with those building on centralized ones. And in particular, the high carrying costs on stable coins comes from the opportunity cost associated with collateral requirements. So if you need to lock up all this collateral, there's some opportunity cost associated with it. So the people that are minting it now want to lend it out for some minimum rate where for them it's relatively risk-free, particularly if they're doing it on something like Aave, where there's minimal risk for the lenders, and they then collect some sort of some carry on this collateral that they have. But as a business that just wants to use the collateral, use the stable coin, it's very expensive because the people that are creating the stable coins that have the collateral, they need some sort of minimum rate of return as a result of the opportunity cost. And in short, the high carrying costs on on-chain stable coins, independent of, we haven't even spoken about centralized liquidity versus decentralized liquidity, right? If you say, well, we're only going to use decentralized liquidity like Liquidity has, now you have an even more tighter squeezed on available collateral because there's very little on-chain decentralized collateral. So you either have to have somewhat centralized collateral where you have a custodian for off-chain value, or if you're limited to on-chain value, there's very little collateral. So if if the goal is to facilitate the adoption of decentralized financial tech stack, the problem seems to be collateral requirements. And businesses clearly don't want something that's as volatile as Bitcoin or Ethereum, particularly to denominate obligations, right? It's very hard to make long-term investments and loans and borrow money denominated in something that's going to go up and down significantly over time. So there's value in stability. There's demand for stability. So once you have demand for stability, now it's a question of carrying costs. And if your stable coins on chain have orders of magnitude higher carrying costs than dollars off chain, businesses building on chain are just not going to be able to compete. Right. That's the core thesis. And again, it's because of collateral issues. So the thought is that there is a real need for a non-collateralized stablecoin implementation. And what that exactly looks like, it remains, I think, an open question from the market's perspective. But Beanstalk is an attempt at implementing a non-collateralized stablecoin through the creation of credit, and in particular through the creation of Beanstalk's credit. So what does that mean? So if you have a non-collateralized stablecoin, there's an easy problem or an easier problem and a harder problem. The easier problem is what to do when the price is too high. The protocol can always mint new stable coins. So you increase the supply, at some point you expect the price to come down. That's a little easier. The harder thing is what to do when the price is too low, when there's an excess of supply. So when we say that Beanstalk is a credit-based stablecoin protocol, what that means is anytime the price is too low, Beanstalk tries to borrow from the open market, in particular borrow beans and issue debt. And so as long as the market views Beanstalk as credit worthy, as long as the market continues to lend to Beanstalk, over time, Beanstalk should be able to return the bean price to whatever it's pegged to. Now, Beanstalk doesn't make any guarantees about the short-term price of a bean, the Beanstalk stablecoin. There's no convertibility, for example. That's one of the major differences between a system like Terra and a system like Beanstalk. There's no hard peg. There's no, Beanstalk oscillates the price above and below $1. And if there are market participants that want to sell at 50 cents, there's nothing Beanstalk can do to stop it. And it recognizes that. And similarly, if people want to buy at $2, as has happened, both situations have happened. People have sold beans at 50 cents and bought beans at $2. Not the most rational behavior per se, right, to interact with a stablecoin protocol. Not to give financial advice, but selling at 50 cents, particularly if you look at the wallet history, a lot of the people that sold at 50 cents also bought at $2. So buy at $2, sell at 50 cents, not the best trade. But the concept is Beanstalk can't make any sort of hard guarantees about the short-term value or even the long-term value of a bean. All it can try to do is oscillate the bean price above and below $1, which is currently the peg of a bean. And the more that it oscillates the bean price above and below $1, the more that market participants are expected to start to trade the price closer to $1, right? So originally, and this is actually what seems to have been played out so far in Beanstalk's relatively brief history, whereas where early on there was a lot of volatility. The price went as high as $4, as low as 24 cents. It took a month plus for the price to really return back to $1 in earnest and start to oscillate above and below peg again. But once it did, people started to trade it a little bit closer to the peg. So the next time it went through a big growth cycle, it only went up to $1.50. I don't remember exactly what it was, but it wasn't $4. And it only went as low as 75 cents. I don't remember exactly either. But the point is, it was much less volatility because people had seen, well, last time that's what happened. So now there's some sort of condensation because the protocol has oscillated the price a little bit. And then the next growth cycle, it was even tighter. Now, to some extent, that was also due to improvements that the DAO was able to make to the protocol that greatly improved the capital efficiency of the entire system, we would say, such that in all situations, there was a much more earnest discovery of supply and demand for beans. And that obviously creates a much more efficient market in the grand scheme of things, which has led to less underlying price volatility. But the bigger point is that if you take a little bit of a step back, the only thing that Beanstalk really does is two things. One, it tries to oscillate the price above and below its peg. And two, going back to the question around credit, it tries to keep its debt level at what is called an optimal debt level, but can be thought of as some sort of sustainable debt level. Because if we go back to the only way that the bean price is stable in the grand scheme of things from a theory perspective, even if there are lots of reasons why short-term the price is stable, is the credit of the protocol. The debt level of the protocol is really another main thing that Beanstalk needs to keep track of if it's going to be healthy in the long term. And so it doesn't just optimize around price, it also optimizes around debt level. And if we look back at Beanstalk's history a little bit, prior to the growth cycle in March and April, prior to the exploit, where Beanstalk grew from something like 30 million, maybe 20 something million beans to over 100 million beans at the time that it was exploited, the entire system basically started to deleverage for the first time. And that was a major proof of concept because the pod rate, the debt level of the system, or what the system uses as a proxy for its debt level, had increased to like, I don't remember what the high was, but it was multiples of the current supply of beans.
Okay.
Something like 10x or more of the supply of beans. So the protocol was, maybe it was 15x. I think the peak was almost 16x. So for every bean the protocol had issued, there was like 16 pods of outstanding debt. So Beanstalk had an immense amount of debt. And a lot of that was due to the fact that the original parameters and even updated parameters to Beanstalk until January, let's call it, so the first 5 months, the debt issuance was imperfect to a point where the protocol just had a continuously increasing debt level until around January. So in January, the debt level flattened out for the first time, and then in February or March, it started to decrease. And while we can never know what actually led to the growth cycle, it did seem like, based on listening to the market activity in the Discord and Twitter and stuff, the beginning of the deleveraging, the very first deleveraging of credit-based money or a fiat-style money on chain, that was very much viewed as somewhat of a proof of concept of Beanstalk by the market, and that did lead to a lot more capital coming in, and the growth cycle that was cut short by the exploit. So that was prior to the exploit. And then I know I've been talking for a while, but to go back to the core point that as long as Beanstalk is viewed as credit worthy, it should be able to maintain the bean price at its peg. Beanstalk, even though it was down for maintenance by the DAO, if you will, for almost 4 months as a result of the exploit, when Beanstalk was replanted on August 6th by the DAO of 2022, so this year, prior to the exploit, it was able to borrow something like $15 million from the market, which I think was more than it had ever borrowed historically, or close to it in terms of actual dollar value. In its first 8 months on chain, it was able to borrow while it was off $15 million, and since then a couple more $1 million to recapitalize the protocol. And when it was replanted, and since then the price has more or less been at $1. There's been some oscillations as would be expected, but generally the price has been at its peg, and therefore the fact that people were willing to lend to the protocol meant Beanstalk was able to revive itself, or be revived by the DAO, merely exclusively because it was credit worthy, because people were willing to lend to the protocols. So I know that was a long answer, but hopefully it's illustrative of how a credit-based money is potentially different.
Yeah.
You know, what's interesting about your description of Beanstalk is we read one of your blog posts. I don't know if you wrote it or not, but there was a philosophical question on their parallels between credit worthiness and the fiat currency system. So my question to you is, how, if a lot of things in I guess in reality are not sustainable, right? And so I think in the blog post you were questioning on, you know, what is the metric of success for any currency? And in the blog post is like, you know, how long can a currency be sustainable to be attributed to actually success, right? And so we have our current fiat monetary system where typically about every 100 years there's a new world reserve currency, and so we're at the end of it for the dollar. And so, you know, what are the parallels between like a credit worthiness, you know, type of currency like Beanstalk, and what are the parallels between that and like a traditional fiat system?
And I guess just to kind of like layer something on top of that, like what other factors have you considered out independent of just credit worthiness that may be necessities as far as like, I guess, inspiring confidence is for participants within your ecosystems to just make sure, like, cause it's definitely like a long-standing balancing act that requires, you know, a lot of contribution, right? So independent of like the native utility of, you know, wanting to create that stable peg for like, you know, tertiary ecosystems to emerge, to leverage that, like what else outside of credit worthiness that you can establish and prove over time? You know, have you thought of other things that could also inject that confidence to your participants as well?
Does that make sense?
Yeah, so a couple questions there. The first is, you know, if we look at the past 500 years or so, and as you said, each of the dominant money over the past 500 years has lasted around 75 to 100 years or so. Right. And the past 100 years has been dominated by fiat money for the first time, really. There have been attempts at fiat money historically, but this is really the first time that the market has adopted at scale, at a global scale, a credit-based money, or at least that we know of. That could be incorrect. But prior to the there were short-term issuances of fiat money during wartime, for example, but there was never a permanent shift to fiat money until the past 100 years. Right. And I think without a doubt, the past 100 years have been some of the most productive in history.
Yeah.
And I think a lot of that is people can obviously debate this, but is due to the coordination that was facilitated by being on the same currency. Everyone's on the same currency. That kind of extends to the past 500 years. But when we talk about what's been special about the past 100 years and fiat money, the world running on fiat money, it seems like there's obviously some problems that come with being on fiat money in terms of credit crunches and short-term problems. But if anything, there's the difference between having like a sovereign credit crunch and having a non-sovereign credit crunch, where you'd have a bank that has some sort of gold issued money or a fractional reserve issued money go bankrupt, and all of the depositors in that bank lose all of their money. There was always a significant amount of cost associated with those losses or people going bankrupt. And so one of the main advantages of a fiat money is you can have a zero collateralized system, right? A fractional reserve system gets you down to close to zero, but this now gets you down to actually zero. So there's in theory an infinite money supply, but where it really comes is in the ability to take risk, right? Where there's an ability to create new money instead of having lenders or savers fully go bankrupt and a full reset. There's clearly been some additional value. The market has placed additional value in having a currency with an infinite supply. And I think that's played out in two different ways. One is in the competitive carrying costs, where the interest rates on fiat money has historically been lower or more competitive than the interest rates on fractional reserve money, even, or hard money, certainly, but fractional reserve implementations of hard money because of the collateral requirements. And in particular, in practice, you have the ability for, in the US system, at least the Fed, to buy treasuries. And through buying treasuries, they're able to manipulate interest rates. Or I don't know if manipulate is the right word necessarily, control. But they're certainly able to affect interest rates in a way where the interest rates on the fiat money are more competitive than the interest rates on the hard money or the fractional implementations of hard money. So that's the first place where it plays out, right? You have more competitive carrying costs. Now, the second place is you've got this ability when you have lenders go bankrupt or potentially bad debt taken on, instead of liquidating large swaths of savers, the ability to just mint new money allows for more risk taking on various ends of the spectrum, but in theory less of a downside when there's poor investments made. Now, the problem, obviously, and it's a big problem, is when the capital, the seigniorage that is being used to affect the interest rates and being used to facilitate more risky lending, such that people can do more things and more people have access to credit. The problem there is when that seigniorage is distributed in a way that's highly disproportionate. And so in practice, what Beanstalk is an implementation of credit-based or fiat money, depending on how you want to think about it, with a totally transparent and as fairly designed as possible issuance schedule of the seigniorage. And so in theory, you get all of the former benefits where you have the competitive carrying costs. You get all of the latter benefits where this hasn't been built yet per se, but lending markets and debt markets built on top of Beanstalk, there's a way for the system to make up the bad debt without liquidating all of the savers per se. And this is where Beanstalk is potentially competitive, or beans are potentially competitive as a currency in general, is that the seigniorage is distributed entirely transparently. So businesses that are participating in the Beanstalk ecosystem are not looking for handouts or don't need to, there's no corruption around accessing the seigniorage whatsoever. It's all done transparently and algorithmically. And therefore you get all the benefits and less of the problems associated with current implementations of fiat money. And that's what we hope Beanstalk is and can become.
You know, one of the interesting things about this conversation, so I think this is a good time to kind of give you our background. And so we started this podcast in 2019 in the heat of the bear. And within this podcast, we ended up interviewing someone in the metaverse industry. And we eventually got into the metaverse as a business. So we have another business called MetaZone that's focused on deployable applications as NFTs. And within that construction, we were building our own content for deploying in the metaverse, our own play-to-earn game. So quickly, we realized that one of the things that we needed to do is come up with a sustainable ecosystem. And if you watch our podcast, we're continuously talking about sustainability. And one of the things that we're struggling with is identifying sustainable anything, right? So if you look at just our life ecosystem, right? The sun is continuously expanding. Eventually, it will engulf Earth and like kill all of life on Earth, right? That's why Elon is pushing for people going onto different planets, right? Because eventually we are going to perish if we stay on Earth, right? So when we're thinking about sustainability, we're trying to come up with examples of what is sustainable. Then we look at fiat currency. It's kind of sort of designed to fail, kind of like what you were talking about, where you can continuously, it's like infinite money, right? Once you have infinite money, then eventually you won't have enough money to pay back the debt, and then therefore the dollar is worthless. So what's interesting about what you're talking about is there in the play to earn ecosystem, there has to be some sort of stable asset in order to distribute within this ecosystem. Mm-hmm. Without that stable asset, you are hinging upon I guess the life of the ecosystem is depending on the value maintaining by itself. Mm-hmm. And so a lot of the times when you have a play to earn ecosystem, it's sort of deemed as sort of like a Ponzi scheme. You have to get new people coming in, the price keeps going up, it brings in more people, and then all of a sudden it just doesn't go up anymore, and then the ecosystem value goes down. Mm. And so one of the things that I believe is going to be kind of necessary or important is the DeFi ecosystem kind of merging with like the metaverse and like play to earn and like everything that's happening, that the digital nation spawning, they're going to have to like play with each other. So I wonder if you believe, like, first, what do you understand about the metaverse, just to kind of kick off this part of the conversation? And like, do you see like the metaverse as an important part of the DeFi space? Like in DeFi, do you guys consider NFTs and metaverse, like all that stuff when you're designing some of these products?
So at this point, we, Publius, are just a small part of Beanstalk and the Beanstalk ecosystem. So there is a significant interest in the metaverse in general in the Beanstalk community. And I think a general recognition that if Beanstalk is to become internet money, widely adopted internet money, right, that it's obviously going to be used in the metaverse. And I think there's a great tweet, I don't remember, it's from a long time ago, but someone saying that Beanstalk is going to be like the world's largest multiplayer like P2P game ever. And the real concept is like that if you have an existence in the metaverse, whatever currency you're using is just going to be the internet currency, right? There's a competition to be the internet currency, but whatever currency that is the currency the metaverse is going to use. Right. And if we go back to what we were talking about before about how there's been a dominant currency that runs for 100 years, approximately each, the hope is that, you know, at least Beanstalk can run for at least 100 years as the dominant metaverse currency before it's overtaken. Or maybe a fork of Beanstalk overtakes it, right? There's no way to know. But the concept is perhaps Beanstalk is just the step in the right direction to create that best money. But what do we think about the metaverse? We love the metaverse. You know, we're excited about. We like the physical world just a lot as well.
Yeah,
certainly. But we're excited at the potential for a lot of this and how it can bring new experiences to a lot of people for a lot cheaper. That's obviously valuable. So,
sure. So let me
an
add
educational perspective and
let me add sort of like when someone asks, why the metaverse? Why is it going to be important? I think we have sort of like a little bit of a unique view of it, where the metaverse is not necessarily for like the people who are like, well off. They're not going to spend, they're going to look for entertaining experiences in the metaverse. But I think the real value of the metaverse is simply creating a digital ecosystem where anyone with internet access can participate. So imagine where people all over the world who have access to the internet that have essentially been disenfranchised just because of their local ecosystem, they can now participate in a digital nation where an activity can actually earn them an income that pays for their physical existence.
Mm-hmm.
And so now we're talking about potentially onboarding 2 billion people who don't have an opportunity locally, but will now have an opportunity in the metaverse to provide whatever it is that we can come up with, whether it's like the low-hanging fruit of play to earn to more complex activities like DeFi in the metaverse.
Yeah, that's why I think the DeFi community, it will leverage the metaverse in that respect, because it's a experimental playground for these new economic models that I think have direct applicability, because the metaverse will facilitate a lot of new value creation, right?
Yes.
So we have to extrapolate how to leverage that. How do we create stable ecosystems on top of that, right? This is where DeFi has to come in and kind of like show us the way, right? The Beanstalk method I think is a very good implementation of that. Like clearly the metaverse has the potential to onboard tons of user activity, right? And from that we could spawn new methods of value creation. But like what is the ultimate end purpose of that? The ultimate end utility of all that activity and galvanization of human value? Well, it's to create new money potentially, like in the virtual sense, like these new forms of monetary systems can again lift up a whole segment of humanity that doesn't have that opportunity.
That's right.
That's kind of how we view the metaverse right now. And we've been kind of like waiting for the DeFi, community kind of like come in and test these theories out, and experiment. But there's also a lot of primitives that have yet to been established for the metaverse itself. Right?
Yes.
Like it's very
and one of the primitives,
non-intuitive,
one of the primitives would be something like Beanstalk, where whenever you create a play to earn game, you can't have a sustainable ecosystem where the token is completely fluctuating constantly.
Mm-hmm.
And so there needs to be a pair of, you have the cryptocurrency of the actual project, but then it's paired somehow and stabilized through these protocols. And so then you could create something with reasonable sustainability. And we're talking sustainability like more than like 5 years, something where the lifespan of a game is about 5 years. I mean, if you could create sustainability at that point, I mean, you have a good ecosystem. Yeah.
So that's definitely always been our focus for sustainability. But I guess, now that we're all in metaverse, for now, I guess you already asked the question of, I guess you guys already have a good interpretation of what the metaverse is and you see value in it, right? But I guess, do you think, you agree, I guess, with what it is we just kind of painted? Like the DeFi integration into the metaverse is going to be as important as we think it is or can be? Like, what are your thoughts on that?
They're certainly going to be complementary. When we think about the right way to build this technology, particularly, we agree with you in terms of who's going to be benefiting the most from this technology. It's currently the people that either at the margin just have access to an internet account but don't have access to banks or more sophisticated technology, or even people that currently don't have internet but are getting there. that's where all of this is going to make the biggest difference. All of Beanstalk is designed to be as frictionless as possible, in particular zero fee. So one of the next projects that the DAO is working on is the implementation of a Beanstalk native AMM or DEX, which will be totally permissionless, obviously, but it's got zero fees. So there's no trading fees whatsoever. And it's so funny the way things work. If you look at the code of current AMMs, a lot of the gas costs of trading in the AMMs actually is from the distribution of the trading fees.
Yeah.
So these protocols are charging their users to charge their users. It just sucks all around.
Yeah.
So the concept is, if you have open source technology, something that goes hand in hand with that is that you shouldn't really be a rent-seeking open source technology. So there's obviously network effects that exist, but the goal is not to create, at least from our perspective, the goal is not to create open source technologies with no fees that are still rent-seeking. The goal is to create non-rent-seeking, totally neutral technologies that then can be used by everybody.
Yeah, and in addition to that, I mean, yeah, I was just going to add that in addition, I feel like, a lot of the stuff, I don't know how it is like in IRL for you when you're talking to your family about what you're doing. I'm pretty sure they have no idea what you're talking about. Would that be correct?
Well, it depends which member of the family, but generally it's not an unfair characterization.
Right. And so it's the same with us when we're talking about the metaverse. We're kind of looked at as kind of crazy, right? It's like, who's gonna spend a lot of time here and all that stuff. So I'm sure it's like, when you're talking to your family about this stuff, it being confusing, but it's equally, when things are this kind of confusing, it's like it's an indicator of potential importance, because all the stuff that you're saying, like, it has huge implications for like the sustainability of like internet ecosystems, right? Because it's like you're saying, it's permissionless. There's like zero fees, right? Is that right? Like zero fees. There's no cost. So what motivates?
There's gas fees, but that's like a security cost imposed by the network. That's
correct.
Not a fee imposed by Beanstalk, the protocol. So
sure.
Yeah. But yes, go ahead.
Sure. So so all these like abilities that you guys have to create these I guess attempts for sustainability, like how do we start thinking about ways of leveraging these protocols in sort of like micro ecosystems? And is there even a way, is like, can we have micro ecosystems that are sustainable, or are we talking about like what Iman usually talks about is like you have to add complexity because you're adding like part of the stuff that you said that you haven't built yet are lending protocols. Is that correct? Like additional complexity that allows for not such a simple entry and exit from an ecosystem, right? Mm-hmm. So yeah, talk about the complexity.
There's so much beauty in composability, and that's one of the things that, from our perspective, really differentiates this technology from any that has existed prior to it. And so when you ask about the existence of micro communities, you said,
yes,
that is, you can't have small communities that are secure without secure money. Money is used to coordinate behavior. And if you have a volatile money, it's very hard to have a secure small community. It's a little bit easier with a volatile money if you have a small community than if you have a bigger community, right? Harder to maintain a bigger community with volatility, but even at a small level, volatility is hard. So if you kind of humor us and assume that there's stable money, be it beans or something else, if there's stable permissionless money, there are probably a lot of other problems associated with creating sustainable micro communities. From my perspective, the first would be security. Maybe it's a micro community within a nation state, and you're paying for security through a nation state. But beyond that, it's hard to think about what else you need other than let's break it down. You need your base money, but what we were talking about earlier is a financial stack. What does that really mean? Well, it's the ability to trade, it's the ability to borrow and lend, it's the ability to take out leverage, and it's potentially other things. But those are sort of the core primitives that currently exist within DeFi. And so what the DAO is currently spending a lot of time working on is the implementation of EVM compatible zero fee implementations of Beanstalk compatible or Beanstalk native implementations of each of those things. So perhaps over the next couple of months, there will be lots of work to show, to speak about this more specifically. But the general concept is once you have money, what you want to be able to do with that money is pretty obvious, right? It's those couple of things that we named, at least to start.
Sure.
And then there will be other needs that present themselves, but those are the first things. Where if I'm a business, at the very least, I need the ability to borrow and lend. I need the ability to buy and sell. And when needed, I need the ability to take on leverage long or short to be able to hedge certain exposures. So that's a pretty good base stack in order to get going. And from that perspective, there's a lot of work being done on, as we said, a zero fee permissionless DEX. Over time, the hope is to extend that not just to a base AMM model, but a more generalized model to support different asset types. More details will hopefully be forthcoming on that in the near future, as well as what is currently understood to be CDPs, where you're taking collateral and minting synthetic exposure against that. And then something like a traditional money market. So something probably a Rari fork to start, or you know, the cool nature of open source technology is that everything being implemented starts as a fork of something else and then gets changed heavily. So in terms of the exchange, Seaport is great. So there's been a lot of reference of Seaport in terms of there's endless stuff to reference and to learn from in terms of how to implement things. And that's really one of the cool parts about open source technology. So the hope is to have the Beanstalk DAO, and also at this point, it's not just the DAO, there are private companies that have raised money to build on Beanstalk, or at least one private company, we should say, that has raised money to build on Beanstalk. And
That's
they're
awesome.
now submitting PRs and Beanstalk improvement proposals to the DAO. So
that's awesome.
It's what will be built on Beanstalk in the coming years, God willing, we can only imagine. But where at least we understand the DAO is starting, and where we're thinking about stuff is those base things that you need to create a sort of base financial stack, as well as trying to put I don't know if you can say finishing touches on Beanstalk. That might not be the right way to think about it, but the base layer is certainly getting to the point where there are only really marginal improvements that have seemed to be possible. It's hard to imagine. Whereas if you look at Beanstalk a year ago and Beanstalk today, you'd say this is orders of magnitude better than this. Maybe there are ways to get orders of magnitude better, but the effect they'll have on peg maintenance is probably orders of magnitude less, because the systems is getting to a point where it's pretty sustainable in its current form. So that doesn't mean that it's going to be long-term sustainable or that it's going to be perpetually sustainable, but it does seem like the base model is getting there. So now one of the main questions is how to re-implement on-chain governance. That's a question that was not answered sufficiently well previously, and is something that clearly does need to be answered sufficiently well going forward. So that's a major open item for the DAO. And there's lots. Go ahead.
Yeah, no, I was just gonna add. By happenstance, I was gonna ask, how do you have on-chain governance? Because I know you've had a couple of podcasts explaining the compromise on April, and so I don't want to beat a dead horse, but ultimately the outcome was that you made an update to the protocol where you needed 5 of 9 multi-sig, right, in order to enact a governance acceptance. Is that correct?
Yeah, the DAO decided to implement off-chain governance, whereby voting now takes place instead of on-chain on Snapshot.
Okay.
And then it requires a multi-sig to implement the changes that were voted on by the DAO. Whereas before, it was on-chain voting and then
Sure.
a permissionless implementation of the changes.
Okay, so my question is, do you have a thesis for decentralizing this aspect, protecting, let's say like a flash loan attack, right, through multi-sig? What are the options? What's the thesis out there in terms of protecting from a flash loan and having decentralized governance actually be a functional thing with protection?
Well, the on-chain governance's previous implementation was not flash loan resistant, obviously, which led to the exploit.
Right.
On the one hand, it would be easy to just slap on flash loan resistance and be like, hopefully this is good enough now. But think that the DAO has quite prudently decided to move a little bit slower going forward. And so right now, let's say there was a flash loan and someone proposed, they did it in such a way where they had the votes to pass some sort of malicious proposal.
Mm-hmm.
The multi-sig would, because it's permission, would just not
Correct.
approve that manipulated governance vote.
Right.
Now, that's obviously imperfect from a permissionless or decentralization perspective, but it's safer.
Sure.
So you're asking about the thesis. The thesis is that it's got to be figured out. That's the thesis.
Okay.
Yeah.
So in the same way
Fair enough.
that the starting point for deciding to work on Beanstalk was, well, the collateral problem has to be figured out one way or another. We have the hubris to think we can be a part of the solution. So that's the short answer. Is we're excited to work with the DAO over the next couple of months to think about different options and potential implementations, and work with Halborn, the auditors that are currently auditing Beanstalk continuously, in order to hopefully ensure that the implementation the DAO goes with is as safe as possible. But obviously, we're not in control of Beanstalk at this point, and if the DAO decides to implement non-safe governance, there's nothing we can do to stop it.
Mm-hmm.
We're because we want Beanstalk to succeed, we're going to try our best to be a part of implementing a safe and secure and sustainable solution to on-chain governance. But it's non-trivial. It's a problem that people have written extensively about, and there don't seem to be very obvious solutions.
Okay.
At the end of the day, everything is a spectrum. And when you look at risk and return, I think that the thing you want to avoid is the potential for risk events like the one that Beanstalk experienced, where you have a complete destruction in value. Whereas the protocol also so that's one thing, that the protocol needs to be resistant to malicious changes where it's attacked or people are implementing bad changes. But on the other hand, if Beanstalk has significant exposure to USDC, let's call it, and USDC is going to be is hacked in some capacity, or Circle goes bankrupt, there's a problem. There needs to be some way for Beanstalk to respond quickly in order to protect the system. So there's a real balance there between moving quick and moving slow, and that was ultimately something Beanstalk didn't get right the first time, but we're optimistic.
That's interesting. It's funny. We just keep thinking about like the sustainability of this stuff, and we always wonder, it's like building a decentralized protocol, kind of like Beanstalk, is sort of like, and doing it completely decentralized and leaving off the decision making to a DAO, doesn't it feel like it's like building a plane while trying to make it fly at the same time? Or do you think it might be better to kind of build out the plane sort of like centralized, and then eventually once the plane can fly, then you leave that off to the community to decide, where it goes, how much the plane tickets are and things like that? Like, do you really, is there?
Well, you got to leave it up to the market to decide how much the plane tickets are. But
right, right.
Yeah, you make a great point about how to develop, and it is worth saying. It's really important to say, when we deployed Beanstalk in August of 2021, we thought it was done.
Yeah.
Mm-hmm.
Like, we thought this is it, and it's the DAO will take care of the rest. Now, we quickly learned there were lots of improvements that could be made, and we've been grateful to be able to work with the DAO. Maybe the better thing to say is just be a part of the DAO.
Sure.
As the DAO has been able to implement lots of improvements to Beanstalk. But really, you gotta just do things the right way. I think it's really hard to start doing things the wrong way and then do things the right way later. You start doing things the right way. Doing things the right way is really fucking hard. And I'm not saying that we're doing things the right way per se. We're trying our best, but it's really hard. It's really hard to start with something bad, or that everyone is like, we'll fix this in the future, and just keep going. I think right now that's Beanstalk's governance. And to that point, how, something like Beanstalk, there's a real Lindy effect of how long has it existed. I think that there's a valid argument to be made that the counter doesn't start again until there's on-chain governance. That the real Lindy effect doesn't take place until we're back, the whole system is back to totally permissionless. Maybe you can say the peg maintenance model's on display, the economics are on display. Sure. That's certainly true. But when we talk about the movement to a permissionless money, that hasn't happened yet, unfortunately, and that sucks. So from our perspective, we started with on-chain governance. That actually didn't work out so good, but it is the cost of doing business in the Wild West, and it is the cost of experimentation. I think that's one thing that DAO's been very good about being transparent about is this is an experiment. Yep. And you can't experiment behind a glass wall, unfortunately. You can theorize behind a glass wall, but at the end of the day, the only way to actually get that Lindy effect, get that security, get that real belief that this works is to be out in the wild. And there have been dozens, maybe dozens is an over-exaggeration, but a lot of failed attempts at algo stables, just from an economics perspective, separate from governance. None of them have even gotten to the point where governance mattered, right? So this is a good problem to have from our perspective, but it's a problem nonetheless that needs to be addressed. So the DAO is working on it, and God willing, it'll happen in time. And we're glass half full type of people, so it'll be figured out at some point because it has to be.
Yeah, you're just like me, glass half full.
Yeah, but I think that transparency is like the most important thing.
It is.
That's anything that can potentially go, I guess, be interpreted as, I don't know, any misstep in any development pathway or project's growth cycles, whatever. As long as you remain transparent and honest and open with your community and the world, having these types of conversations with outsiders and.
Yeah, I got to commend you guys. So
this is a big deal.
I understand that you guys were anonymous until the compromise, and then you guys kind of disclosed, who you are and that you weren't a part of it. And so I got to commend you guys for doing that. That's a very good example of how to do things properly. So no one's immune to getting compromised. So I think you guys handle it excellently.
Yeah. I'm like half and half on the whole. Remember, like I do like the idea of anonymous founders to decentralized organizations or applications, whatever. I think there's merit in that. And
I agree.
I think it's fine, but also I think it can have the potential to produce or be co-opted, I guess, by, you know, bad actors. So
Sure.
the fact that you're able to come out of that potential negative interpretation and just, you know, basically verify to the world that, you know, we're not one of those. You know, I think that that's going to give your ecosystem that longevity that it needs, like the
Credibility.
confidence, especially if an accredit based,
Yeah.
you know,
Exactly.
algo stable coin like that has to factor in
Yeah.
my opinion. So, you know, this is one of those battles I think the Web3 space is gonna deal with, as far as like what is the actual ethos? Are we building totally distributed, you know, ecosystems? We all want just a bunch of Satoshis creating new innovative technological platforms.
Yeah.
We don't necessarily know, like, who are the actual founders to these things, but we appreciate the services and the, you know,
Yes.
the products that they created,
Yeah.
and the communities they galvanized around that. Like, is that what we want, or is it more like some hybrid approach? You know, this
Right,
is, you know, yeah. But these are things, like you said, we'll figure out along the way, just like the governance issues, everything, right? It's just that's all part of the fun, right? Is figuring this stuff out, like one step at a time.
Yeah. So that's about our time, Publius. I appreciate you joining, you know, and talking to us about Beanstalk and everything. I guess I'm gonna ask: is there any other last words? Any potential releases that you want everybody to know about? Anything? Any last words before we head out here?
No, just want to say thank you guys for having us and for taking an interest in Beanstalk. We don't really view our role as selling Beanstalk as much as just talking about. In fact, we don't want to sell it to anybody. We want to just talk about it and explain how it works and let people know that it exists and that it is potentially an exciting part of the future of DeFi. So from that perspective, we're just grateful for you guys for sharing your platform with us. And to your point about anonymity, yeah, it's hard to know what the right thing is.
Yeah.
Obviously, push came to shove in our instance, and, you know, it had to be done. But we continue to have these interviews and act as Publius because we really do view it as important to one day retire Publius, and Publius needs to disappear at some point. And it's going to be a lot harder to make that happen if we are interacting in our current capacity individually, right?
Sure.
As individuals. So we continue to use the pseudonym because one day the hope is Publius can actually disappear. So it's still probably a little bit early for that. Beanstalk is still only a little over a year old, but we remain ambitious in our goal to be totally irrelevant to the success of Beanstalk in the not too distant future.
Interesting.
Yeah, I love that.
Yeah.
Yeah, I appreciate your time, man. Let's have another follow-up call here pretty soon, especially on new releases and everything. So again, I really appreciate your time, and let's follow up on Discord.
Wonderful. Thank you guys for having me.
All right, thank you guys for watching. That's been Publius from Beanstalk, a completely decentralized stablecoin. And so make sure you follow us on Twitter at The Block Runner, at MetaZone.io, and Rovi AI, and we will catch you in the next video.